We're on Chapter 13, Employers' Payroll Taxes. So I need you to turn to page 386, and we're going to complete 13.2, Work Together. So one of the things that employers have to pay on their own are all of these taxes. So not only do you take Social Security and Medicare out of your employees' paychecks, but you as an employer also owe that same amount of money. You're going to have to pay for it as well. You also owe unemployment taxes. So when people get laid off or whatever and they collect unemployment, this is where the money comes from. So you must also pay federal unemployment taxes and state unemployment taxes. So this up here is to show you how we calculate employee earnings. And when we're done, we're going to get a number here. And this is the amount that we use to calculate unemployment taxes. Okay? So, page 386 is Work Together 13.2. We have Nick. And we're saying that so far, he's earned $6,100. Now, here's the magic number. As soon as an employee reaches $7,000, then we no longer use him to calculate the amount of money we owe for unemployment. So 7,000 is the number. So right now we're saying that he's earned $6,100. Well, he hasn't earned $7,000 yet, okay? So what's the difference? So 7,000 minus the 6,100, sorry. 7,000 minus the 6,100 equals 900. So see, you can see where that came from right here. So that means that $900 out of his next gross earnings will be calculated for unemployment, okay? So $900. So we're going to look at this column. Is it more or less than $900? Because that's the only amount that we can take out. So once 900's met, he doesn't owe us any more, or we don't take any more out for unemployment. So does this make sense? We've got to get $900 more out of him. But his next paycheck now is only $762.50. So this is less, right? So that means all of these earnings will be calculated for unemployment. So we're going to put $762.50. Now I'm going to make a point here. So we've used up $762.50. So let's take that minus the 900. We'll just call it 763 to make my life easier here right now. 10 minus 3 is 7, 9 minus 6 is 3. 8 minus 7 is 1. So can you see where we're only going to calculate $137 of his next paycheck? So if he got the same amount of money, $762.50, then we're only going to calculate unemployment off of the next $137. So this represents his gross earnings for the pay period. So let's say it's July 15. This is the gross pay. Okay, that's where this is coming from. So now let's look over here. He's already earned over $7,000, the magic number. So how much does he have left that we're going to have to take out of? None, because he's already over $7,000. Here's his paycheck, his gross pay. How much of this paycheck will be a contribution that we're going to have to make for earnings, unemployment? None, because he's already reached the $7,000. So we're going to put a 0 here. So now here's our next one. He earned before July 15th, say June 30th, $4,380 in accumulated earnings. So if I take $7,000 minus the $4,380, I'm going to get $2,620. So that means I need to, I'm going to have to pay unemployment on him on his next $2,620 of earnings. So now it's payday. His next earnings are $527. Well, he hasn't even come close to the $7,000 yet, right? So how much of his paycheck will we have to calculate unemployment on? The entire paycheck, $527, right? Because for next period, how much of his earnings will we have to pay unemployment on? It'll be the $2,620 minus the $527. Here, let me make that better so you can. Minus the $527. Okay, so that'd be 10 minus 7 is 3, 11 minus 2 is 9, 0, 2, right? So that would mean over here it would be his next $2,993. Okay, here he's earned, accumulated earnings so far is $6,850. So what this really means is up to this point, June 30th, he's earned a total of $6,850 from us. So 7,000 is our magic number. So these two subtracted, 7,000 minus 6,850 is 150. So on whatever his next earnings are, we can only use 150 of it to calculate. So his next paycheck is $849.50, right? So we can't use the whole paycheck because we're only going to calculate, he only has 150 left. So that would mean the 150, right? So next paycheck, how much money could be calculated? None, because he's already hit that 7,000. Does that make sense? So now we're going to add these up. So we're going to add this column up, and I'll put the plus sign right there so you know. And that's $3,179. And then we'll add these up, and that's $1,439.50. It's this number that we need to know in order to make the calculations here about what is the amount that we owe for unemployment, for federal and state. We're going to use this number. Now, Social Security still remains the same. It's still as of gross pay. So that would be whatever you have here goes for Social and Medicare. So we're going to take the $3,179, this right here, we'll take $3,179 times, and we said Social Security is 6.2%. 6.2%. And we're going to round up. That's $197.10. So that means we owe $197.10 for our portion of Social Security. So if you want to make a note, it was $31.79 times 6.2%. We owe the same amount, so we're going to multiply $31.79 times 1.45%. So we're going to take the $31.79 times 1.45%, and we'll get $46.10. And so $46.10. Okay? Now, here's our unemployment taxes. So we're no longer going to use this number. We need to use this amount, because this is the amount that we're going to calculate the 0.8% and the 5.4%. So right here, we'll make ourselves a note, $14.39.50 times 0.8%. Okay? And when I do that, I will get $11.52. So let me make sure that's right. $14.39 times, what did I say, 0.8%, $11.51. How did I get 52? I must have plugged something in wrong, okay? Now, unemployment will be the same. It's $14.39.50 times 5.4%. So, $14.39.50 times 5.4%. And so I'll get $77.73. Okay, so the total payroll taxes, the total amount of money we owe, we'll add, and we're going to add these 4 up, is $332.50. And right here, we'll just make a note, 197.10 plus 46.10 plus 11.52 plus 77.73 equals, and then we'll draw an arrow right there. So those are your employer payroll taxes, okay? Right there. Now, we need to journalize this because this is like a little worksheet, because we now owe this amount of money in employer payroll taxes. So, taxes are an expense of the business. So let's just say, according to your problem, it was May, not July. So we'll say it was May 15th. Expenses always carry a debit balance. So it will be a debit to payroll tax expense. And it will be for this amount, okay, the $332.45. And your credits will be all of these numbers here. So Social Security, tax payable, because you don't get to keep these, you need to send these on to the state. So since you haven't sent them yet, they become a liability of the business. And all liabilities end with the word payable. So that is the exact account. It's a liability. And then you will credit Social Security tax payable for that $197.10. Medicare tax payable is $46.10. Unemployment tax payable, and I'll put dash fed, and it is $11.52. And then the last one is unemployment tax payable state, and it is $77.73. So when I get done, my one debit, remember debits and credits have to equal this, and we can say, I don't remember what your book said, use page 10, and it's a memo 46, so it'll be M46 for the document number. Okay, now let's make ourselves a note. What was this? Journalizing Employer Payroll Taxes. There you go. And that is how you calculate unemployment and how you journalize employer payroll taxes.